8 to 12 months from now, we're likely the Fed's at least paused or begun to cut rates, and that should be positive for BTC.
What's up, everybody, and welcome to BitLab Academy. Good morning, good afternoon, good night, wherever you are tuned in from, and really welcome to the BitBoy Crypto channel. This is a special edition with me, Kelly Kellam, your host, breaking down what the alpha is in the charts today, what we can do looking forward, how we can pull out the data, the insights that gives that secret sauce to those that are making profitable decisions in these markets. And we have an absolutely incredible guest that's coming on today, and I'll be introducing him in just a moment. But before we do that, make sure you go down, drop an elbow on that like button, hit that subscribe button, ding that bell, join our community. And if you have not yet, make sure that you head over to bitlabacademy.com. Check out all these socials that we got down here. Head over to the BitLab Academy Twitter page, which is at Academy BitLab. And again, hit that like button, subscribe. And we're not going to drag this out any longer. We've got a great guest today, and it is Mr. Will Clemente himself. How are you doing, good sir?
Hey, Kelly, great to be on, man. I'm doing well. How about yourself?
You know, I'm doing pretty good. The market has been a little bit, it's been a little bit frustrating for some, and I figured this is the type of time that we want to bring out people that have deep alpha, have a different lens on the market, and really provide some tools for people to not feel so lost as to what's going on, so they feel like they have a tool belt so they can navigate with a purpose. So with that being said, Will, you've been in the space. You really exploded onto the scene. I mean, right after you finished your 13th master's degree, you know, I mean, you just came on, you know, you've got 37 years into traditional finance. I don't know where you came from with that inner mind you've got at such a young age. So what would you say? I mean, I was trying to contextualize this earlier before we started, how I was going to introduce you. And for anybody that doesn't know Will, Will Clemente has been a powerhouse in the space, bringing different looks at the market, a lot of research. He's got a wonderful company called Reflexivity Research, and he's got a great Twitter. If you're not following him, I'm going to go ahead and rerun this so you can see it. Make sure you follow him right there at Will Clemente III for the third. But one of the things I think is a reason why you may have exploded on the space, on the digital asset ecosystem so strongly, is that the traditional finance-minded people that are rooted in legacy finance and the systems that are in place, even if they're interested in Bitcoin and digital assets and crypto, it's not like just learning to ride a different bike. It's like an entirely different vehicle. However, once you get into it, it's so much more transparent. So with that being said, when you're looking at the market right now, what do you feel with the data you have, the research that you're doing? What's your initial sentiment about what's going on right now in the market?
Sure. First of all, thanks so much for the kind words and the introduction there. Very humbled. Yeah, in terms of perception of the market right now, I think, you know, from an on-chain perspective, we've kind of moved out of quote unquote deep value readings across a lot of these valuation metrics, and we can kind of get into what some of those are if you'd like. But I would say, you know, we're far from kind of the overheated levels reached, you know, during periods like the end of 2017, the end of 2021, even, you know, the end of the bear market rally of 2019, end of 2013, periods like those. And so, you know, I would say likely very, very much in the kind of early innings of, you know, the Bitcoin cycle. Of course, I wish that I went all in on Pepe coin a couple days ago, but unfortunately missed out on that one. So we'll have to catch the next one. Surely we'll catch the next 100,000x, Kelly.
I know, right? Just all in, take it all out of this slow asset like Bitcoin. You know, we had a guest on here. I have him on pretty regularly, Bill Noble, and he made an excellent point that I think a lot of us forget. We get so caught up in the greed of seeing people that have made millions in crypto. And we want to jump in and we expect to do it in 3 months, 6 months with the first coin pick, with the first trade. And, and how slow Bitcoin is comparatively with altcoins, because you do see multi-10,000, multi-10,000x coins out there, or that has been in the past, but we also see just as fast things fall. And what we forget is, although this is an exciting space and there's so much to be gained, so much to grow into in this space, there's so much evolution yet to come, that Bitcoin, even if you're chasing altcoins and the huge gains that come with altcoins, that's also, of course, increased risk exposure. But we also have to remember Bitcoin, Bill Noble said this, it was so perfect. Bitcoin is essentially like an altcoin to traditional legacy stocks and equities. So what's your thoughts on that? And what's your sort of disposition now? Because I know you're kind of straddling, you're definitely more in the digital ecosystem, but what's your viewpoint for yourself right now as we're traversing these? We're on the 4-year cycle. It should be going up soon, but we also have this global economic uncertainty that's just weighing all this pressure down. So how are you sort of negotiating this? Are you more hedged in traditional assets? Are you just sitting on the sidelines with dry powder? Dry powder coined from Will Clemente himself. Wonderful, wonderful phrase. What's your action plan at the moment?
Yeah, sure. I think none of us really predicted the fact that Pepe coin was going to be the uncorrelated hedge for all the banking failures. But yeah, in terms of my personal kind of allocation strategy, I no longer trade as much as I perhaps used to with now I'm running a research firm. Primarily, my portfolio just consists of BTC, kind of a barbell portfolio of BTC and cash, with small portion of my portfolio allocated to a select kind of basket of altcoins. And the reason for that is the way I view altcoins is really just beta to Bitcoin. And so for anyone who doesn't know what that means, essentially it's just the idea that altcoins are going to outperform Bitcoin on the way up. Of course, you have these periods of Bitcoin dominance, but on kind of like a multi-year basis, and then heading back into the bear market, altcoins are going to draw down more aggressively than Bitcoin. And so I think, while some individuals may express their bullishness on BTC through just flat out percentage of their portfolio being allocated to BTC, which, to be clear, I have a very large, egregious amount of my net worth denominated in Bitcoin. Some individuals may express, an extended bullish view by taking on leverage. I think another way to kind of express that, extreme, maybe, multi-year bullish view is to just purchase altcoins as essentially, again, higher beta to Bitcoin. Depends the way you go about that. I think the clearest version of doing that would just be to allocate to Ethereum rather than, kind of picking, your select basket of like low cap coins or things like that. But I think, one way to think about kind of, expressing a, multi-year bullish view on BTC from just a pure, portfolio allocation standpoint is to, instead of perhaps taking on leverage, which of course you can get, liquidated on kind of the way up with these, enormous drawdowns that we see that are, just another day for BTC would be 30-40% drawdowns on the way up with historical Bitcoin price action. Of course, if you're holding, spot alt says beta to BTC, you can't get stopped out on those. So that's kind of how I view it, at least from a like portfolio allocation standpoint.
I appreciate that. I really like that sort of thought exercise. We think a lot of people think they need to go. One, it's kind of outlandish to think that we need to go on leverage on tokens that are some of the fastest moving assets in history, right? And how fast they're growing. And that it really just exemplifies how much greed is in the market. And I'm not calling anybody out. I'm calling every single one of us out. I'm the same way. The first time I got up to about $100,000 in crypto, I did it on spot trading and just a smart investment strategy. And then I was like, you know what? I'm going to throw this in leverage and I'm going to be a millionaire in like 4 days. You know what? talk about starting from scratch. I call that my crypto tuition. And I think as much as we, even here at BitLab Academy, we make every effort to provide a platform to help people work through the psychology as well as the technical skills of not only just reading price action, but tying in some of the things that one of the most underused tools out there, on-chain data, the ability to see per block being print what the assets are doing, who's doing it, that, you know, the wallet size, the transaction size, miner health. There's so much going into this, and we've seen a large shift since, you know, I think in the 64 top and then the 69K top. And I don't know, I'm curious your perspective on this. I don't know if there was actually a misreading of the data from a lot of people in that regard, because there was so much directional bias for that 100K mark that looking back, all the things that said that it should go up, if you really digged a little deeper, or if you really dug a little deeper, you would have found contested sort of things with that hypothesis. And so I think there's been a resetting of people doing less bias or challenge your bias sort of diligence on the assets and direction. So you being so in depth with on-chain data, what is your go-to, you know, coming out of the last cycle, going into where we're at now, if you're trying to determine, not necessarily a top and a bottom, that stuff's sort of easy to figure out, but more like, it's not easy to figure out, but it's easier to recognize, you know, in concert with the data. But when we're looking right now, we're getting small pullbacks. We may be starting a bull trend. Is there what's your sauce right now? What are you looking for? What's that? Are you looking into miners? Are you looking into wallet sizes? Are you looking into long-term holders? What's your plan right now with on-chain?
Sure. Yeah, I think maybe we could take like a brief step back and just talk about, you know, what is blockchain data, why is it valuable, and like, you know, different high level ways to apply it. You can think of blockchain data as, you know, in traditional finance, you have 10Ks and 10Qs, which are quarterly and annual reports on companies, where you are essentially get a look into the kind of, you know, inner financial plumbing and performance of a company. With Bitcoin, we have this every second of the day, verifiable for anyone to see around the world instantly, permissionlessly. I can go on, you know, any blockchain data provider, and I can also do this myself if I don't want to use and trust a blockchain data provider. I can spin up my own node and pull all the data, the entire, you know, ledger going back to the inception of Bitcoin, every single transaction that's ever taken place on the network by myself, if I really wanted to do that, which I think is extremely powerful. So we can, you know, constantly, you know, at any time get a snapshot, look over the entire quote unquote Bitcoin economy or Bitcoin network. There's a couple ways that we can kind of apply that. One is for what I would say are kind of more the Nansens and Arkham intelligences of the world. These are blockchain data providers that go in and they basically label different wallets. Primarily, you know, we're looking here at maybe high net worth individuals, hedge funds, OTC desks, entities like that. The idea here is we're tracking quote unquote smart money, and then we're able to come to conclusions and say, okay, this hedge fund that has a very high hit rate historically on picking different altcoins, for example, is accumulating a really large position in this one token. So maybe it's worth looking into. Or maybe they're dumping a ton of this token that historically they've been one of the largest backers of, and they own a large portion of the supply. So, you know, that's one way to apply it in terms of essentially copy trading what funds are doing. And the interesting thing, obviously, about crypto again is that, you know, we can track all these transactions transparently in real time. So I can, you know, see instantaneously, okay, a hedge fund just sent literally 5 seconds ago, you know, half of the supply that they own of this specific token, probably moving it onto the exchange to sell. You know, I want to front run them and sell before they do. Or, you know, maybe they just moved a ton of stable coins onto an exchange, so it's likely that they're moving those stables onto an exchange to purchase an asset. So that's one way to apply it. The second way is more for use of, I guess the way to think of this is kind of forensics, I guess is probably the best word to these are kind of the chain analysis of the world, the elliptics of the world. What they're doing is essentially trying to track who exactly the market participants are on every side of majority of transactions and be able to track nefarious actors on chain. So think, money launderers, terrorists, things like this. And by the way, this is the reason why whenever you hear an individual refer to crypto as being, something that terrorists and people who are trying to evade money laundering restrictions and things like that, it's completely misguided. I mean, crypto is the absolute worst thing that you could use to launder money from, because Chainalysis can tell with over 90% accuracy who's on at the two sides of every single transaction that takes place in crypto.
And it's recorded permanently for history. This is one of those, especially when you hear politicians touting it or major news networks. And the major news networks thing has started to shift. They're actually, I'm noticing, coming on onto the side of crypto and blockchain, because there's the awareness of blockchain at a base layer, not just deep knowledge, but just a base layer, has kind of entered the zeitgeist on a real level. But when you have people like Elizabeth Warren, this anti-crypto brigade, and it's like, do you realize if you're really against the things that you say you're against, you would be running towards crypto because you'd have all of that stuff tracked?
Yeah, 100%. I mean, we could go down the rabbit hole of the discussion of, the anti-crypto regulation, and I guess I don't want to derail the conversation too much. I'll get back to the other applications of on-chain data, but I do think, like, just on this specific point, it's worth stating. I think the regulatory actors and agencies in the U.S. need to be very careful about how they're thinking about and approaching regulating the space. I think the purpose of why they've taken such harsh regulation against BTC and crypto broadly, but specifically Bitcoin, is because it challenges, frankly, the hegemony of the dollar. And so the way I see it is, it's essentially capital controls. So whenever a country is concerned about, flight of capital out of their country, historically, you'll see, countries implement capital controls, so restricting capital from leaving the system. And I think that's exactly what's going on. I don't think the government is stupid. Although there's definitely some individuals that aren't the brightest, or maybe are kind of out of touch with what's going on in the space because, maybe they were 50 years old when the internet was created, which is cool, but I don't think they should be making decisions about crypto. I think a lot of the regulatory efforts are doing the exact opposite of what they're trying to accomplish. Right? If their goal is to quote unquote control or have on a spectrum of control, of course they can't control permissionless decentralized technology. But if they want to try their best or get a higher degree of control around on and off ramps, what they should actually be doing is encouraging capital to come into the U.S. By pushing capital, by having harsher restrictions on these crypto infrastructure companies in the U.S. What it's actually doing is it's pushing capital, talent, and activity offshore and on chain. And so when you see places like Hong Kong, who last week had put out a press release essentially that they wanted to encourage people to come into Hong Kong from crypto, and they're open arms saying, hey, look, you come build here. We'd love to have innovation and talent come move to our jurisdiction. I don't think that's a coincidence. So that comes right after all the kind of anti crypto regulatory efforts from the U.S. So I think they need to be very careful if their goal really is to try to establish some degree of control, because right now what they're doing is giving the complete opposite effect of what their intentions seem to be. And it's the same thing with the miners. Recently, the Biden administration proposed a 30% tax, a quote unquote carbon emissions tax on Bitcoin miners. The U.S. has the strictest carbon emission regulations in the entire world. And so if their goal is to really reduce carbon emissions globally, what they should be doing is encouraging miners to come into the U.S., not move out of the U.S., and, through incentivizing them to do so by increasing the taxes on them, to move to jurisdictions where there's lower restrictions around carbon emissions, which would do the exact opposite again of what they're saying that their intentions are. So anyway, I could get fired up about that, but I'll get back to the original question. Other applications, we talk about forensics, we talk about labeling specific funds, OTC desks, high net worth individuals, things like that. The other piece is following what I would say are Bitcoin's economics. So this is everything from tracking block height just to see that the network is continuing to pump out blocks, to block times to see that blocks are coming out roughly every 10 minutes, to look at supply issuance to see that roughly 900 Bitcoin are coming out every day, and that's going to be cut in half in roughly a year time, and we can get into that in a minute. Transfer volumes, transaction counts, basically all the kind of inner workings of the system, just to show you that, yes, maybe Bitcoin's price is down 70 or 80%, but the actual core network is functioning exactly as intended. And then we can take some of those pieces of information and apply them to analyzing essentially the broader cyclicality based on Bitcoin's kind of economic plumbing. And so this is a little more sophisticated than just looking at block height or block time. But these are a lot of the things that I find really interesting and post a lot on Twitter with these kind of multi-year cyclical valuation models or momentum indicators and things like that. I think maybe that's probably the route that you want to go down a bit, and we can maybe get into whatever one of those kind of subsectors that you'd like.
No, of course. And by the way, again, thank you for being here, everybody. If you haven't yet, make sure you head over to Will Clemente's Twitter page, which is right here. Give him a follow, and also go and check out Reflexivity Research. They got some great content here. They're doing some really amazing things. Jumping back in here with our guest, Will Clemente. So, question here, we've got. I think everybody's wondering. There's a narrative that's been shaped around. Some of it's FUD, some of it's true, some of it's, who the hell knows with all this stuff going on with the banks. Of course, right now, one of the biggest questions right now with where Bitcoin's going is, where's the liquidity going to come from if we are going to get a run, where's the liquidity going to come from? So my question to you is going to be kind of open-ended. I'll let you take it whatever direction you want, but I'll just give you some topics based on what's going on in the market right now. We're hoping for a run, hoping for some sort of base for the pre-run halving, the pre-run bull cycle before the halving. If we're not going to get that, where's the liquidity going to come from? What's happening right now with the banks? Because I saw on, you could pull it up if you like, on the report that y'all did for, I forget who you did it for, but it was basically showing transaction volumes on Bitcoin network, just basically going through not through the roof, but going up quite a bit through the March, April, 3 different bank crashes in that period. And we're seeing this narrative. It's no longer a narrative for Bitcoin. We're seeing it play out in real time. Banks failing again, and we're seeing the strength of the Bitcoin is stronger than ever, and we're seeing things play out. So what are you looking at right now to sort of gain insight for your, where the market's going, what's happening with liquidity? Is the US dollar going away? Give us the sauce.
Sure. Very jam-packed question. I'll try to break all that down. I would say, first of all, it's quite vindicating as a Bitcoin holder to see Bitcoin rip every time that we see another bank failure. I think for people that have been in the space for a while, it's great to finally see Bitcoin, act as quote unquote it should, at least, in our view, or maybe, the market's finally waking up to that. So to touch, I guess, on the macro piece, I would say that this is an extremely challenging environment to navigate. Stanley Druckenmiller, who's one of the most world-renowned macroeconomic investors in the entire world, built his career under George Soros and then launched his own fund. Has been one of the most successful macroeconomic traders ever. He recently did a keynote last week or interview last week and stated that this is the most challenging and confusing time period of his entire career. So if you feel confused, just as to a degree I do, and don't feel too discouraged, because Stanley Druckenmiller feels the same. So I think that kind of shows the state of where things are at. It's a very nuanced question. You've got a lot of factors that go into it, right? The Fed's mandate is technically to look at inflation as well as employment, and then kind of a third kind of quasi mandate of price stability. And it's interesting because the labor market really hasn't shown a ton of weakness, frankly, at least to date, and maybe that's coming in the back half of the year, but we haven't seen that yet. Inflation has come down a bit, but it's still quite elevated. But then at the same time, we have a lot of these banks that had essentially interest rate risk that are now blowing up. And so the Fed's in a really, and then on top of that, we have this debt ceiling issue where they're likely going to raise the debt ceiling.
We're going to get that $1 trillion coin. How ridiculous is that? Yeah.
Yeah, it's absolutely insane. You just print a Chuck E. Cheese coin worth $1 trillion, I guess. But yeah, I mean, we'll see. I'm assuming they're gonna, I'm in the camp of they're gonna raise the debt ceiling like they have historically, and they'll perpetually continue to do so for the next 50 or 100 years. And once they do that, depending on who the buyers are of that debt that they're going to issue, it could have pretty negative impacts on the overall state of liquidity. It just depends, does the buying come from money market funds? Does it come from the reverse repo facility? I would say like on a spectrum of kind of outcomes, I think Treasury will try to pull some of those flows out of the reverse repo facility. And the ultimate bullish case would be if the Fed just bought all the debt. But the most bearish case in terms of the debt issuance once they raise the debt ceiling would be if they just go to the open market to purchase all of that. So that's another, kind of TBD. There's like a kind of, spectrum of possibilities that could play out there. Where I think the state of liquidity is 8 to 12 months from now. I think we've kind of passed the velocity of rate hikes and like peak hawkishness. I would say 8 to 12 months from now, we're likely the Fed's at least paused or has begun to cut rates, and that should be positive for BTC. And so I think some of the positive price action that we've seen from Bitcoin, just purely in relation to kind of the state of macro, has likely been a reflection of the market's always forward looking. And so I think as we've kind of gotten past that quote unquote peak hawkishness, I think Bitcoin's been kind of pricing that in. And then the other piece that you mentioned in terms of Bitcoin's transaction volumes and transaction counts. So it's interesting. Like you mentioned, we just recently put out a report on this, essentially breaking down Bitcoin's supply halving. And then we talked briefly about transactional activity and things like that. Bitcoin's transaction counts, so the number of transactions that Bitcoin's settled, just reached, and when you look at the daily value of how many transactions it settled, just reached an all-time high over the last week. And so what's driving that? It's frankly, it's not people buying Bitcoin because it's a hedge against the, banks blowing up. It's the rise of ordinals, actually. When we look at ordinals, they've now generated over $7.6 million of fees for the Bitcoin network. We've seen now the mempool, which is the backlog of Bitcoin transactions, the most full that it's been since the FTX blow up. We've seen transaction fees now are the highest since July of 2021. So across the board, we've seen the rise of ordinals, which are, very similar to NFTs. They're essentially just speculative vehicles. But there's been a ton of excitement around them, and that's translated into higher demand for the use of the Bitcoin blockchain. And so, just from a kind of blockchain 101 perspective, whenever more people want to use the chain, people have to raise the fees that they're willing to give in Bitcoin's case to miners to include their transaction in the block. So that's translated to, again, the highest fees that we've seen since July of 2021. And so I think it's quite interesting because this is, Bitcoin is 70% off the lows, but it's still far from the 2021 highs that it reached of 69,000. And so, I think if you've got transactional activity this high in a bear market, what is that going to look like in a raging bull market similar to the beginning of 2021? I think, if ordinals aren't a fad, the likelihood that individuals are going to be priced out of using the Bitcoin base chain, in terms of smaller kind of retail type of entities, is pretty high. And so I would say what I'm feeling quite, if the trend of ordinals, the activity around ordinals continues and isn't just a flash in the pan, I feel quite bullish on the Lightning Network, which is Bitcoin's layer 2 scaling solution, which it should be used for payments. There's several companies that are working on building kind of real world integrations and applications around Lightning. The most well known one's probably Jack Mallers and Strike. You've also had David Marcus, who previously built some substantial products in the in the payments world, launched something called LightSpark, which is very similar. kind of, easy to use, very sleek, user interface, application of Lightning. And so I think as you have more integrations and easier to use interfaces around Lightning, paired with, this heightened transaction activity on the base chain and higher fees as a byproduct of that, the likelihood of users having to move to Lightning is, in my view, pretty high for the next few years. Again, with the caveat that the trend of ordinals continues. So that's one thing that I'm watching for. Of course, Lightning doesn't have a token, but it's much more of a kind of fundamental view. I feel pretty excited about the future prospects of Lightning at the moment.
Oh no, of course, yeah. Lightning it's a vehicle accelerator. Go faster, cheaper. But you're not going to take a lot of stuff. But it's a lot of interesting things I hadn't considered that you just brought up there in regards to the ordinals, and it's also one of those things. I was thinking myself about when I do my own on-chain data analysis. One of the we're talking about people that are regulating crypto that were 50 when the internet came out. At the end of the day, all things require to adapt or die, right? And so, this kind of trails back to what I was talking about, or ties back to what I was talking about earlier. In the 64 to 69K top area, there are certain metrics on on-chain data that were not anywhere near signaling that there was a likely high. And I think part of I'm curious your thoughts on this. Part of the reason why I think that is because the 64K top, some would argue was the real top, although the price was higher on 69K. You can measure it against the M21S, the M2 money supply chart, or there's many other things you can look at. So inflation could have had something to do with it, but looking at just on-chain data charts, the top was likely signaled around the 64K top, getting an incredibly robust and strong sort of secondary rally from retail short-term holders. There was no really long-term holders buying. It just somehow there was nobody selling. It's really all it was. There was no new interest. There was just nobody selling. They're holding on to that 100K number. So that us all knowing that, being more aware to try to find things that can disprove things, especially when you're trying to identify tops or bottoms, that could make a huge difference in getting out in time or being, getting out $20,000 below the price level if you're only looking at on-chain. So being so in depth with on-chain that you are, how much, because of course, on-chain is going to give you more macro signals and some sort of local stuff. How much of this on-chain are you tying in to your technical analysis, like finding key levels? Are you more of a longer term? Do you I don't want to say recommend, or do you see more longer term position sort of setups using? I'm just asking your particular position on this and your thoughts on-chain with how you're using it to identify macro trends.
Yeah, sure. Yeah, I would say, first of all, I generally agree with you in terms of the 64K top versus the 69K top, specifically as it pertains to a lot of the network activity and transactional activity that we've seen on the Bitcoin network. A ton of the measures, everything from fees to active addresses to transaction counts, all these things, all peaked out during that April 2021 64K top. And all those things were lackluster in 2021 and at the end of 2021. And in retrospect, shouldn't have overlooked those things. In terms of the valuation metrics, we got very close to kind of reaching the quote unquote levels of overheated that we did, in previous cycles of 2013, 2017. But you're right, we didn't quite get there. But what was really useful from an on-chain perspective and saved me a lot of pain was the momentum indicators. So two of these that I think maybe are worth mentioning. One is address momentum. So you can look at 2 moving averages of new addresses. So for example, the 365-day and 30-day moving average.
Do you have it? Do you have the ability to share a screen? Let's.
Sure,
yeah. I know we're going to be wrapping out here in the next 10 or 15 minutes. So let's drop some charts on some people and share some examples.
Yeah, absolutely. Let me share my screen.
And everybody, if you have not done it yet, come over to check out Reflexivity Research. This is one of Will's companies, along with a number of other really wonderful people in the space, very smart. And check out his page right here at Will Clemente. Give him a follow. I really appreciate having him here and sharing these thoughts. going to go take my face off the screen.
Appreciate
So
it.
this is all charts.
So this, for example, is a metric called new address momentum. So here, again, we're looking at the 365-day and 30-day moving average of new addresses on the Bitcoin blockchain. And so as you can see, whenever that 30-day crosses below whenever the 365-day moving average crosses below the 30-day, that signaled that we've kind of lost high time frame momentum. You can see it's roughly kind of served as support through these time periods, showing you that from a high time frame standpoint, we are still in a kind of multi-year bull market. And that actually crossed over right around the April high. So you can see here at 58K roughly, and at the beginning of May of 2021, we saw that crossover there. So that's one example of kind of on-chain momentum. Another one is something called
I really like this. I've never seen that chart. That's really interesting.
The credit goes to Checkmate, who's the lead analyst at Glassnode. He actually created that. This is something called short-term holder cost basis. So I guess I back up, talk about like what am I referring to by saying cost basis, and then what am I referring to by saying short-term holders, and then we can describe what exactly this means. Realized price or cost basis they're both interchangeable terms just for the sake of conversation. The way realized price or cost basis is calculated is by looking at the price of every coin multiplied by the amount of coins that last moved at the price that they last moved. So, for example, I bought 100,000 Bitcoin at $1 per Bitcoin. In today's terms, that's whatever, 2.8 and some change billion dollars worth of Bitcoin. But in realized cap terms, if I still haven't moved those coins since I bought them at $1, it's still only adding $100,000 to realized cap. So it's based on the price that coins last moved, rather than taking the marginal trading price times the circulating supply to get the market cap. And so once we have this value of the realized capitalization, we just simply divide it by circulating supply, and we get realized price or cost basis. And this is a good proxy for the aggregated cost basis of the network. You can also filter out, older coins, dormant coins, for example, Satoshi's coins, and get a little more accurate of a cost basis, and that's actually slightly higher than the realized price, but it's still a good rough proxy of the aggregated cost basis of the network. What I'm referring to by saying short-term holders is based on some of the data science work that the Glassnode team has done, who I've worked pretty closely now with now for several years. They basically ran some statistical studies and looked at the likelihood of coins being spent out of wallets based on how long they've been in the wallet. So what they found is that after 155 days, which if you divide that by 30 is 5 months. So after 5 months, the likelihood of a coin being spent again from a wallet that's been holding those BTC drops off dramatically. Why exactly is that? From like a deep-rooted human psychology perspective, I couldn't tell you. But when we look at the likelihood of coins being spent based off historical data, based on the time that they've been held in wallets, drops off significantly after that 5-month threshold. So for the sake of conversation, some people are like, "Oh, you've been holding your coins for 5 months. That doesn't deem you a long-term holder." Just for the sake of terminology of what we're looking at on the screen, anything before 5 months in on-chain terms is a short-term holder. Anything above 5 months is a long-term holder.
Yeah,
and so we're looking at.
I want everybody out there that's listening right now. This is, I think, and I could be wrong, but to my own analysis with on-chain, I find the short-term holder cost basis is probably one of the most important. Basically long-term holder, realized price, and short-term holder cost basis gives such excellent signals as to what the health of the market is, especially determining trend. Because with short-term holders, you're going to have a mixing of people that are just traders, right? There can be somebody that technically has strong hands. They might be holding 10,000 Bitcoin in a hardware wallet, but they may be actively trading Bitcoin. And so the Bitcoin that they're actively trading, that's all short-term held because they're trading the volatility. It's basically you're getting a signal as to where price is relative above or below, basically strength or below weakness. People being willing to hold into volatility, or people not, they're wanting price to go down because they're looking for lower prices. So I just wanted to point that out to everybody listening.
Yeah, to kind of curtail on that point, I think the way to think about it is, in a raging bull market, whenever you retest the cost basis of new investors, which are short-term holders because they've been in the market for less than 5 months, they're able to kind of round trip back to their cost basis. Maybe they added their cost basis. Well, once you get significantly below that cost basis, it's really difficult not to get those new market participants that maybe, by definition, because they're new market participants, don't have the strongest understanding of Bitcoin, to not sell their coins whenever you retest that cost basis. So let's look at 2017, for example. Zoom in a little bit. As you can see, this served as support throughout the entire kind of 2017 run up. Very similar to how you may look at a moving average or something like that. Once we broke below this and retested from the underside, we saw several rejections right at that cost basis, almost to the tick. Why is that? We saw one right here, 1, 2, 3, 4, 5 rejections, almost to the tick, off of realized cost basis. I'm sorry, off of short-term holder cost basis. The reason is because you're getting back to that cost basis of those market participants. And so after being down 50%, they just want to get out and break even because they're like, that was really scary. Let me just get out of this market. I don't know what's going on. Like, let me stop playing around with this Bitcoin thing. I don't know a whole lot about it as much as I thought I did. And so that's why, from like a psychology perspective, you see several rejections once that gets flipped. However, once you reclaim that on like a multi-year view, that's a very positive sign. So we saw this right before the major 2019 run-up. I would say COVID is somewhat of an anomaly. We saw this service support in September of 2020, retested as support after the kind of little doldrums of summer of 2021, and then once we broke below this, to get to the point I was making also with the new address momentum, this is another indicator that you could have looked at the back half of 2021 to see once we broke below this. And I was pretty vocal about this on Twitter, and I kind of used this as defining, okay, are we in a bull or bear market? And I said, look, the short-term holder cost basis is at 53K. You think of it as, if-then statements. If we're above that, we're good. But once we're below that, it's reason for concern. And once we broke below that, I became quite cautious. And then especially once we retested that and got rejected from the underside at the beginning of April. And then we also saw this serve as resistance again in the beginning of November of 22. And recently you'll see we flipped that, very similar to the beginning of 2019, and then bounced almost to the tick off of it as support. So that's one way to apply it from a momentum perspective. And then the last thing we can look at is the long-term holder realized price. So this is very similar to what we just mentioned. Let me just put on the same scale because it's not on the same scale. Very similar to everything we described about short-term holders. Same idea, just you're looking at the market participants that have been in the market for over 155 days instead. And so when we contrast the two of these cost bases, we get a quite interesting market signal on kind of a multi-year basis of gauging whether we're in a bull or bear trend. Kelly, I'll let you edit this out while I get the scale right. Hold on.
Well, I'll flip back over here real quick. And again, make sure you come over here and follow Will. And if you haven't yet, make sure you come over to check out, I'm on the annotation screen right now. Let me turn off the annotation, exit. Okay, here we go. So make sure you come over, give me a follow as well if you haven't yet. Share a lot of great stuff, what's going on in the market. Of course, here I'm on the Hit Network team here. And of course, if you haven't followed BitLab Academy, what are you doing with yourself? Get over there, follow it. By the way, we do daily streams on the BitLab Academy YouTube page, which is right here, youtube.com/@BitLab Academy. Come give us a follow. We started this literally about I think just about 3 months ago. We're already pushing about 7,000 subscribers. Come join the family. It's encouragement. It's an encouraging community that's all about bridging that gap from beginner to pro. So we talk alpha, but we always throw a rope back to all the beginners out there so you can understand what tools you can use to best navigate the market. So do we give some price targets and some TA and charts? Absolutely, but we also break down why they're important. It's essentially a free avenue for us to give as much value as we can. And I'll talk a little bit more about BitLab Academy here once we wrap this, once Will has to leave. But jumping back over here to Mr. Will, I think it's up now.
Yeah, sorry, I was playing around with the scales to get it right. For some reason, they weren't on the same scale. But yeah, like I mentioned, here we're looking at, so we have short-term holder cost basis still in the purple, but then we have the long-term holder cost basis in blue. And so you'll see there's quite interesting signal in terms of the crossovers of the two of these. So as you can see, whenever the long-term holder cost basis is above the short-term holder cost basis, that's been a signal of kind of accumulation or solid time to accumulate. So you see here, 2018, and then recently here as well. But once you see that short-term, whenever you see the short-term holder cost basis reclaim the long-term holder cost basis, that's at least historically signaled that perhaps the kind of multi-year, from like a multi-year cycle perspective, the bear market's in. And so we'll look at one more chart, which essentially highlights exactly that. Let me find it. So many of these things.
Oh, you gotta save your chart.
All right, here we go.
And just so everybody knows that's out there, yeah, Glassnode, by the way, is a phenomenal on-chain data chart service provider. If you're not there yet, you don't want to pay for something just off the get-go. I mean, not only with trading, but with any tool set that you're going to use, master the free stuff first, and then work your way up there. There's plenty of free stuff out there. In our on-chain data course in BitLab Academy, we outline a lot of the resources, but you can go to lookintobitcoin.com, checkonchain.com, looknode.com, and work your way up. Glassnode, I do think, has the best data out there. But if you're just starting and you're trying to pull up one chart, maybe you should practice utilizing some of the free tools first. They're not going to be up to the second. It might be 4 days delayed data, but when you're looking at on-chain, you're really looking at a broader view at the market anyway. You don't need to see what happened 10 minutes ago on-chain because you're not using it for a trade signal.
Yeah, I think that's well said. I think if you're looking at lower time frames, you should be looking at derivatives, order books, as well as price action. But yeah, just to wrap up the point on the cost bases, the only difference between the last chart I showed in this is just I had Glassnode in Workbench create essentially this shading whenever the short-term holder cost basis is below long-term holder cost basis, and so that's that green there. So that's essentially just indicating that it's a good time to accumulate. So this is just one way that you could perhaps apply, cost bases and on-chain analysis for kind of multi-year, allocation strategies. And so as you can see, it's been historically a prudent time to accumulate whenever we have that green shading, and whenever we get out of that period of green shading that's signaled, at least historically, the beginning of multi-year bull run. So you'll see, prior to the 2013 period, prior to the 2017 bull run, prior to the run up to 2021. Of course, you had the COVID drawdown in between. And then recently, we've finally gotten out of that period of accumulation identified by this metric.
Yeah, it's such good stuff. Short-term holder cost basis. I tell everybody out there, it's one of my go-tos. And it's a secret little hack, and I know this will probably change at some point. Might have to do more with market dynamics and psychology. But Kevin Svensson actually pointed out to me about a year and a half ago. He was on my podcast, Crypto Answered, and he said, one of the hacks he found, because he just had a bunch of people that were completely opposed to on-chain data for whatever reason. I guess ignorance is bliss until you learn what data can really provide you. Because at the end of the day, you want to trade on data, not on price, right? And what he showed was that the 128-day simple moving average on a basically just general price action chart on Bitcoin actually lines up incredibly strongly, a very, very tight correlation with where the short-term holder cost basis is. So I don't necessarily use it specifically as a replacement, but if I'm looking at my chart, maybe I'm on my phone or I don't have my multi-monitor set up, I'm on the road, sometimes I just throw a 128-day moving average on there and just kind of see where price is and relative to it, because it does hold a strong correlation.
Oh, that's interesting. I didn't know that.
Yeah. So I know we're going to be wrapping out here, Will. I really appreciate you being on. Before we go, tell me a little bit about what you're doing. What specifically are you all doing over there at Reflexivity Research? What kind of data are you guys working on? Is this public facing? Is it private stuff for equity firms? What are you doing there? What should people know about you? What's coming up next?
Yeah, sure. Appreciate the plug. I launched Reflexivity with Pomp about 7 months ago now. Actually, right before FTX blew up, which wasn't a fun time to launch a company. But nonetheless, we're here for the long term, so it's all good. You can think of Reflexivity as just a pure research shop. We have kind of a core membership offering where we have released 3 to 5 reports every single week for our clients, which they're written by myself as well as the other guys on the team, which are much smarter than me, from everything from Bitcoin to DeFi to covering layer ones to macro to the regulatory landscape. So kind of a full scope view of everything that you kind of need to be aware to navigate these crypto markets. And then also we do a ton of kind of public facing stuff with different infrastructure companies in the space, as well as we'll do kind of custom reports for internal use for hedge funds, family offices, and things like that. We also do now have, as of 2 weeks ago, a free newsletter where we release one of the reports that we release every week through that free newsletter list. So if you're interested, kind of just want to check it out, or maybe are just partially interested as kind of a side hobby, you could sign up for the free newsletter, which is both in my bio as well as Reflexivity Research's Twitter account's bio as well.
Oh, that's awesome, man. Again, Will, I really appreciate you coming on. I appreciate you sharing some of those little wisdom nuggets you got tinkling around in your brain there. You do an incredible amount of stuff for the space in terms of the data that you provide, because I know even with your Reflexivity Research, and I think were you with Blockware before?
I was with Blockware for about a year.
So, you've always been in a lot of really interesting positions within the space, but separate from that, what I find amazing and what I really appreciate about anybody in any business, in any niche, doesn't matter, is the people that focus as heavily as you do on the amount of free data that you provide in terms of what you're seeing in the market, the charts you share. So you probably you wouldn't know this because we're about to relaunch BitLab Academy with a brand new website, all new courses, and one of my main focuses in there that I really want everybody to dive into is the Onchain data course, because I think you'll agree with this. Even if you're a beginner and you don't know where to start, you don't know what price action is, learn those things, yes, but to really understand the dynamics of really like who's buying what and where, if you can understand the behavior of different market participants, see where good accumulation zones are, where good distribution zones are, AKA strong hands, big money, smart money buying near bottoms and not buying the hype cycle at a top, you learn a lot of this stuff just organically when you start learning about on-chain data. And it really does a huge amount of a wealth of good and a wealth of knowledge to your own trading strategy and awareness of market cycles. So I appreciate how much free value you give away and helping this ecosystem grow, because yes, there's things that we do need to charge for because all of us need to pay rent. But this ecosystem's not going to grow if we do not provide free tools for people to understand, and because this is very different than the traditional banking system, traditional finance system. And thank God, because look at the state of the traditional banking system right now, right? So if you got anything else to say, other than that, I'll continue on without you for the next 10 minutes or so.
Well, I agree with a lot of what you said, and thanks so much, Kelly, for having me on. I hope I provided some value for the listeners, and maybe we could do it again soon in the future.
Absolutely, Will. I appreciate it. Everybody, go follow Will. I'll see you later. You have a wonderful weekend, Will. Everybody else, I hope you're having a good day, regardless of what the market is doing, regardless of if it's up or down. Have you hugged a friend? Have you told a loved one that you care about them, that you miss them, that you appreciate what they do? We need to remember these markets, they serve as a tool for us to dive into potentially exploring our ability to have financial sovereignty, right? So what's the point of having, like, getting to that point where you have financial sovereignty and then you have nobody around because you didn't have a balanced life? So with that being said, I do want to again just shout out Reflexivity Research. This is his business there, his company, and Will Clemente. And of course, if you have not yet, come and follow BitLab Academy. We do daily streams Monday through Friday, 10 a.m. to 11:30 a.m. Eastern time, and every day. If you come in here and follow BitLab Academy, retweet each day that you retweet the daily tweet and hit the like button on these basically daily promos, you get entered to win. Could be, we've given away $100 in USDT. We've given away lifetime memberships to the indicators. We've given away courses, and we've got so much coming up right now with BitLab Academy. So I do want to just shout out and just give you all a little sneak peek of what's going on here. This is the new BitLab Academy website. It is Saturday right now, all of you watching. And so this is either already launched or is launching in the next 48 hours. So I will say, check out bitlabacademy.com. If you have this page, this is a page when we're recording this. This is basically the legacy BitLab Academy page. If you do sign up before we actually roll out the new content, then you're going to be able to keep the current pricing, the lower pricing. This, I think it's $29.99 a month right now. You get access to our premium Discord, where we have a huge community in there sharing thoughts, providing support, providing feedback, both BitLab alumni as well as other experts in the field. We're going to be doing all new content that's coming out. But my point is, if you sign up before all this content rolls out, you're going to be able to keep the current price for the life of your account. And because you're watching on a Saturday, you can use the code BitLab15 for an additional 15% off the first month. And in addition to that, we have all these BitLab indicators that you see with the relative extrema, the market intelligence, hidden volume, significant movement, really giving that detailed look at what's happening in the market. And you can use BitLab 15 for this as well. And if that doesn't work, you can, BitSquad 15 or BitLab 15, either or at checkout. And this is the new website. And just a little sneak peek, where is it at? Right here. Some of the courses. We've got a lot of free stuff because we want to make sure the beginners have a solid foundation and can really understand what's going on in the market. Whether you are looking to just find out what these basic what the heck are people talking about? What is market order? What is a limit order? If you're just trying to find basic definitions, we got you covered in the new BitLab Academy. We have a lot of free content, but then we've got a ton of content for those people further along their journey, all the way from, self-custody. Everybody should know how to self-custody. If you don't, dive into this course. Trading fundamentals, breaking down all the things you really need to understand in this market before you start trading. Psychology of trading, so you have the right operating system. We've got on-chain data analysis, a course everybody should take. And by the way, members have access to every course. It's basically all access, and we're adding more courses over time. This is going to be an ever-growing content field that you have access to as a BitLab member. Candles, understand price action. What does a specific candle mean? Is it signifying a potential reversal? Chart patterns. You can identify true, strength, growing momentum, weakening momentum, likely breakout and targets. Understand what's going on in the market. Indicators, not just our indicators, all the indicators, the standard stuff, RSIs, stochastics, Bollinger Bands, VPVR, as well as our indicators, Market Cipher, a BitLab trading stack. We really want to make sure everybody has a solid foundation. And of course, I don't want to say wrap it up, but this sort of the trading aspect of this is sort of wrapped up with the trading strategies course that has different ideas and concepts all tied together that you learn through the rest of BitLab Academy, so that you can dominate this space and trade confidently with a plan. And so that you can have patience and not worry about what's going on, because you can look at a chart, you can map it out. And if you're a long-term position trader, you've got a strategy, you've got a plan. If you're a short-term scalper, it's okay. You map out your chart, you do your TA, and you walk to your desk, you sit down, and you don't go, what's it gonna do? First step, we never know what it's going to do. All we can do is stack probabilities, and we have all kind of different trading strategies, and this is going to be growing quickly, adding different guest experts in here, sharing their strategies as well. And again, all this is in the new BitLab Academy, and we'll have a FAQ on here as well that really helps you if you have any questions about anything. you can just come in here and it has all this stuff just broken down very simply. So it's very easy to join. So it's very easy to figure out what it is that you want. It has all that. And if you don't have the answer to your question, send us a message. Send me a DM on my own personal Twitter page, which is right here at Kelly Kellam. You can see me right here. There's only one. There's so many fake accounts out there, but it's Kelly, Kellam. And again, before you go, make sure you go and follow BitLab Academy Twitter page. With that, I hope you all have an absolutely wonderful day. I look forward to seeing you in the new BitLab Academy, in the Discord, and on the morning stream, 10 a.m. every weekday, Monday through Friday, on the BitLab Academy daily stream on YouTube. Thank you to the Hit Network, BitBoy, Ben, TJ, everybody, and all the editors that have worked so tirelessly on getting all of this content. It's over 100, I don't even remember the number. It's over 100 new lessons. It's like 5x what was in the old BitLab Academy. So get in there. I hope you all have a wonderful day. That's all I got. I'll see you later.